see over here in line with the candlestick chart, right? So this is where things get very interesting. And this is where I've been coaching many traders over the last few months just to get them to understand the power of what you see in front of you, right? So when we come into a zone, when we come into a fair value gap, we are looking at these numbers over here. Now, in particular, we're going to be looking at this wick rejection into the zone, right? So again, to make things very clear, we're in a 15-minute fair value gap and we're using the 1-minute time frame to validate our entries. So what we see here is a bunch of numbers on NQ, but we're going to understand what these numbers actually mean, right? So notice how we have a lot of red over here. We have this highlighted red area over here, right? So what's important to understand over here is that we have significant selling volume, right? But if the level itself is this entire area zoomed in, when we have significant selling volume in this region, but the market fails to break below this level, what that means is that aggressive sellers are being absorbed. Now, when aggressive sellers are being absorbed, this means the zone is strong. And the reason why the zone is strong is because we see passive buyers that are popping up in this area and driving price higher. So if there's one thing you want to remember is that you're looking for the opposing market participants to fail. In this case, we see a ton of aggressive selling. If you look down here right toward the bottom of the candle, we see 2 for 0 and we see 7 for 0. This means there's more aggressive sellers than there are aggressive buyers. But despite that, the market is able to find an area of demand from this area. We're able to see demand hold, which means passive buyers have absorbed aggressive sellers. That's essentially how the order flow works, right? So again, we see the same thing over here in the markets, right? We see how prices come in and we see red delta